Hello everyone, my name is Matthew Frailey with breakpointtrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems since 2003. Okay, let's go ahead and get right into this. So this is a technical review of the markets, commodities, cryptos, precious metals for the week ending October 24th, 2021. Basically the weekend newsletter. Hope everyone had a great weekend. It's Sunday afternoon, about 5 p.m. Eastern Standard Time. Market ES futures will open here in about an hour, so probably as we're finishing up this recording. So I'm also recording this as a YouTube video and, of course, our standard format here where you can get all the chart links. Let me go ahead and move that out of the way, and so let's get started here. So again, this is the weekend newsletter for Sunday, October 24th. The newsletter is divided into 8 major sections. Again, the same general theme as I always keep. We first look at the last week's action, statistics, upcoming economic news, earnings, release dates. Before we get into the major indexes, we're going to review the Fang stocks. Most of the Fang stocks report this week. Google, Apple, Facebook, etc. Netflix had already reported. But all the rest are reporting this week. So a lot of big tech here. So we're going to take a look at those charts. Then we'll go ahead and move on to the general market indexes. We'll do a top-down fashion where we look at the monthly and weekly charts, then down to the daily, 2-hour, 60-minute, 15-minute, etc. So we like to do a nice top-down fashion. We'll also review the KISS trending systems. Then we'll move over to some important indicators. We'll look at bonds, TLT, JNK, and 10-year Treasury rates. We'll examine most of the sectors, as well as emerging markets and international. Then we'll do a deep dive on commodities. Here's the various commodities we're going to be looking at. As you know, they're in a secular bull market. We'll also review US dollar, cryptocurrencies. I'm not going to look at the crypto stocks. They've all had a nice correction. So we'll probably take a look at those this week once we get some trade setups there, but we'll review the cryptos themselves like Bitcoin and Ethereum. Then we'll move to precious metals, gold, silver, and platinum. We'll also look at GDX and a few of the individual names. We've had some great moves in that sector. I've had long ideas in there for the last month. Hopefully you participate in a few of those. I would like to now see a pullback, higher low in that sector. As far as trade ideas, I didn't add anything new here. I'm just going to cover recently triggered setups. I may add some new ones on the trading community blog later tonight. Okay. Again, I didn't write a bunch of text here. All my detailed observations and thoughts are in this video and my audio commentary. Okay, so let's go ahead and get started here. So item number 2 below shows the index sector table, what transpired on Friday and last week. So for Friday, major indexes, most of them were a little bit down except for the Dow. It's only 30 stocks. We don't cover the Dow that much. For the week, everything was up pretty nicely, 1 to 1.5%. For the major market sectors for the week, most sectors were up. Oil services gave back about 1%, metals and mining, and biotech. I'm going to be watching biotech. It's been the weakest sector this year. It's in a bottoming coil pattern. So I'm going to watch that to see if I get a low risk long, or maybe it breaks down for another short. But it's had a nice correction all year long. Currencies, US dollar down 0.3% for the week. Cryptocurrencies, they were down off their highs. As you know, they all made new highs on Thursday. Then they pulled back. And here's how they closed for the week. As far as commodities, kind of a mixed bag here. The general CRB or DBC was slightly down. Crude oil continues to be super strong. Natural gas on Friday alone up 6.75%, up 1% for the week. Copper, big correction. It's been very strong lately, but given quite a bit back there. Some of the ags were up, sugar down, precious metals up nicely, gold up 1.5%, silver up almost 4.5%. GDX, the miners, the stocks up about 1.5%. Bonds, high yield corporate, and TLT down for the week, and of course the long-term yields are nicely up. 10-year Treasury yield up 5%. Next. Item number 3 shows the economic news calendar for this week. Again, guys, we're in earnings season, so market is focused on that. On our general newsletter, I always suggest to click on this yellow area, and that brings you to a list of stocks. Use the Control F on your keyboard. You can find when they report. But this week, we got a lot of those Fang stocks reporting. So that'll be market moving action. So let's go ahead and look at the Fang stocks first off. So first off, first image below, item number 4 is Netflix. Now they are reported. The only reason I'm showing it is because it is a Fang stock, and this was a long idea of ours. We had it as a bull flag pattern, and it's played out nicely. Next. Chart number 5, looking at Facebook. They topped out here in early September. Broken uptrend line here. You can see the moving average flipped to a bearish configuration back here. And bounced off the 200-day moving average, so give you a bounce trade. That was an easy long for at least a trade. Hope you took your profits. You can see what happened with the moving average ribbon. It pinched there. It's the times when these moving average ribbons pinches, like back here, you're bullishly stacked. So all these pinch areas end up being good, good buy opportunities, all these little pinch areas. All right. Just like this pinch area ended up being a good short area. So it got rejected down. It's back to the 200-day moving average here. If it doesn't hold that, then you got a bigger support down here. But again, the big important thing is they report on Monday after hours. So they report on October 25th, Monday, and they report after hours. All these Fang stocks report after hours instead of in the morning, pre-market. Next. Chart number 6, here's Google. They had a nice rally off this October low. They report on the 26th after hours. So they report on Tuesday. You can see they had a pretty nice move up here, but couldn't take out that August highs. So here's potential support areas down here. Again, they're going to move on these earnings, guys. Right now the chart looks weak. Your stochastics got overbought here. Your volume sell-off increased. But like I said, earnings can trump charts, so we'll see how these behave this week. But technically, for now, it looks weak, sort of like an ABC bounce, just from a technical perspective. Next. Chart number 7, here's Microsoft. They've been such a strong stock. They buy back a lot of their stock, as you know. Back here, you had a little double top correction. That was a good buying opportunity. Never did get down to these other longer-term support areas, then made a new high, recovered. They report on Tuesday after the close as well, the 26th. This chart is strong. Next. Chart number 8, here's Apple. So Apple, a nice correction. Didn't quite get to its 200-day moving average and big support area. Got pretty close, but didn't get down there. Rallied up to the 61.8% fib retracement from this high to this low. So that's a technical resistance. It's an important fib. And they report on the 28th. So they report on Wednesday after the close. So we'll see. Since they report on Wednesday, does it just pause here and then break? Who knows? But for now, technically, we're pausing right at this resistance. Usually they rally into earnings, but they've already had a nice bounce into it, and earnings is on Wednesday. Next. Chart number 9, here's a weekly view of Apple. Just shows you the long-term uptrend. But really the reason I'm showing you this is, guys, just from a educational perspective, not everyone is a short-term trader, and a lot of us have longer-term accounts. And, I've talked about this before, but what I find is a very simple way, if you have long-term positions that you want to manage with some sort of stop protection, but you want to give them wide girth. If you use a weekly chart, set your stops at the higher lows. So this goes back to late 2018 on Apple. But so after, let's say you were long Apple back here, and you could see it move to 52, pull back. And then once it formed this higher low, you just keep moving your stops up to each new higher low. That 2020 February, March sell-off would not have hit that previous higher low. Not sure if it would have scared you out or not, but if you adhered to that system, you'd have still stayed in. And then, of course, once the March low was put in, That's your new stop. So moved up slightly from here. And then Apple is continuing to form new higher lows on the weekly chart. So your stops get moved progressively to each new higher low. And presumably, if you wanted to keep a pretty tight stop, your stop could now go up here. And again, originally, think about it, your trend stop would have been down there. So this is a nice method that will avoid a lot of noise and allow you to stay in positions for many years at times. Again, not everything is always cut and dry. You know, should you set your higher low stop here now, or do you wait for price to make a slight new high before to confirm that higher low? That's where the art of it sometimes gets into place. So, I mean, technically we do have a potential higher low here, but it's not really confirmed until we take out the highs. But that's where your stop would go once your highs are taken out. And so again, you could have your stop here, or you still have it down here. So that's a way to manage long-term positions, guys, say on a weekly chart. Just continue to moving them up to each new higher low. It's super easy, but it's effective. Next. Chart number 10, Amazon. So Amazon's still weak. This does have, we've talked about it before. This, we call it like a quasi. Could it have like a quasi little head and shoulder pattern here, perhaps? I don't like it so much as a head and shoulder. And again, it would have to break this neckline for that to even be a possibility. For now, we bounced off this area. This is your resistance. If it can take out this downtrend line, this prior lower high, that would be a positive. So you're basically between support and resistance. Resistance, support, and you got a support right here in the middle. This one reports on Wednesday, October 28th, after hours. So we'll see which way this one goes as well. So again, guys, these Fang stocks, and they are a huge percentage of the market, they will determine what the market's going to do here, I think, going in, the rest of October into November. Next. Chart 11, not a Fang stock, but DWAC. I figured I would mention this. I forgot to mention it on my Thursday newsletter. I can't believe I forgot. But Steve, to his credit, on Thursday, called me up pre-market, mentioned DWAC, the Trump SPAC, and pre-market, it was trading in the 10s. That's when him and I bought a position pre-market. He posted it on the trading community blog 3 or 4 times that morning. So when he first posted it, I think it was around 11. So if you guys are following our trading community blog, you could have caught this sucker. So on Thursday, it rallied up to 52, closed at 41. I traded it a few times. Steve was quite sick. He sold his around, I think, the 17s. He said he bought it in 11 area or 10 area. So he had a good trade, but he had to go lay down and he sold it. I traded it several times that day. I took some home, and I was nervous about it. Then, of course, it gapped up on Friday, went up to 175. It was halted so many damn times here, so I ended up selling the rest of mine around 130. I didn't get out up here. I got distracted. Again, it ended up being halted 3 or 4 times, and that was my biggest concern about it. Just we had such a strong move on this sucker. It was halted. It was a halt. Also just being Trump and... Again, I don't care what end of the political spectrum you're on. Anything Trump is controversial. Media is against it, and a lot of the government. So you never know if this sucker gets halted for weeks or something happens, and just nervous trading this sucker. But again, we did have it on Breakpoint. We posted it on Thursday morning before trading. We posted it in the morning. So you had plenty of opportunity to buy this thing. Ended up rallying almost 1,700%. That's crazy. A 17 bagger in basically a little over a day. So again, one thing regarding this stock, it's going to be volatile going forward. There's a lot of Trump supporters out there, so maybe this can continue higher. But I reviewed a little bit more of this on the weekend, and the thing that they need to address right away is the software they're using. So if you look into this, the Software Freedom Conservatory is maybe going to file a suit. The Trump Media Group has 30 days to comply. Basically, they're using open source software called Mastodon. And when you do that, you need to, any changes or upgrades you make to that software, you need to make it freely, you need to publish that. And they haven't done that. So that's one thing they need to do. Otherwise, they're going to be open to a suit. All right, guys. Otherwise, trading this thing's like trading with fire. But congrats if any of you caught this sucker. All right, enough of that. Let's go ahead and move on to the market. So again, first off, we start with the bigger picture charts. Here's the weekly view of the indexes. So we did have that typical seasonal weakness in September. These are the weekly charts. In the last 2 to 3 weeks, we've recovered nicely. Here's the Dow. Made a new all-time high again. You can see it's up the last 3 weeks. Held the lower Bollinger Bands. The S&P also up the last 3 weeks. A new all-time high. The Nasdaq tech area is still lagging here a bit. And of course, the Russell IWM still stuck in this big horizontal rectangle pattern. Okay. Remember my discussion on Apple before, using those higher lows as your trailing stops? Again, the same could be done with the weekly stocks. You get your higher lows, higher lows, higher lows. That's kind of what the KISS systems do on the weekly charts. Also, this pullback that we had into late September, a lot of technicians, Elliott Wavers, were viewing this as a fourth wave, which we discussed. So technically, we're probably in some sort of wave 5 now. Next. Chapter 13, here's the daily view of the indexes. Again, we bottomed there in early October. S&P and Dow, new all-time highs. Now, assuming this was a fourth wave correction, we do technically meet a fifth wave high here. So, you know, could the market trick everyone and sell off? We have a fifth wave high. It could, or this wave 5, you know, is still ongoing. But technically, you have met that fifth wave high requirement. The Nasdaq area, they, of course, have not made it back. And, of course, the Russell still stuck in this, you know, 1, 2, 3, 4, 5, 6, 7, 8 month range. Next. Chart 14, here's the monthly chart. So, again, we were up 7 months in a row here, which we discussed back in August. And we talked about the seasonality, and we ended up getting that weak seasonality. We got a nice down September. We into the support area. What we didn't know at the time is if that was, we were still going to probe lower and maybe tag the 9-month EMA. We haven't tagged that in a long time. We haven't tagged that since September, October of 2020. That eventually will be a magnet. You know, you only can stay away from these short-term moving averages before you test them. But we recovered. I talked about the market needed to recover, take back 50% of that down candle, and obviously it did. Next. Chart 15, here's the weekly view of the S&P. Again, it's been a wild, you know, last year and a half, big 35%, 30% correction there in February, March of 2020, then recovery. We continue to form these higher lows, which again, trailing stops could go up. So long-term 401k plan, trailing stop could be right there at that, you know, 4,300 higher low. So technically, again, a lot of Elliott Wavers are viewing this as a fourth wave correction. We're in some sort of wave 5. Your moving average ribbon's been a good guide. You could see it was pinching on that pullback. Now, here's one thing I am watching for, guys. So the MACD, we had a divergence. Go ahead and draw that in. We had a technical divergence here to here. You can see I have it drawn in a MACD. And we did get that little pullback here. Now we're recovering. So this little uptrend line here, the dotted one, I'm watching, this could also act as a resistance area up in here. But the main thing that I'm going to try to point out here is notice the MACD is really lagging. So while we had a divergence back here, we have a bigger divergence setting up. And fifth waves often set up with MACD divergence. I talk about that. All right, so let me start that again. I had a distraction. So again, one thing you'll learn in technical analysis with Elliott Wave, and I've discussed this, is wave 5 patterns always end in a MACD divergence. That's one thing, a trick that I've learned to distinguish wave 5 patterns. And you clearly you can see how, unless price were just a crazily rally from here to a ridiculous amount to negate this divergence, more than likely this MACD will form a lower high. So you'll end with some sort of divergence. Okay. Let's move on. Chart 16, here's the weekly KISS for the S&P. Again, no new DVTs last week despite the rally up. We still have that DVT right around that 4,300 area, that higher low. Again, think of the DVTs on the weekly, just, like a trailing stop. The system went long way back here, and it's consistently added a new higher low trailing stop. The market's been consistent enough that these weekly DVTs have not been hit. So that's the latest one. Should the market push up a little higher, we'll get another one. I think we have 22 consecutive DVTs now. This moving average ribbon has also been a good guide with the BPTMA Deluxe. You can see the last area. It turned red for 4 weeks, 4 bars. And back here you had it. So usually bullish pullbacks into uptrends, this BPTMA will be red from anywhere from 4 to 3 bars. And so that met that. Next. Moving on to the smaller time frame, here's the daily. So again, on the S&P, we had basically an ABC type correction. Here, we formed a lower high back here. That was a good shorting opportunity, that wave B, which we talked about. And then at the time, we weren't sure if we were going to maybe form another lower high, come down, test the 200-day moving average, but wasn't to be. Rallied up, formed a higher low here. And you had sort of an inverse head and shoulder pattern here, which I'll show you on a 2-hour chart. We've rallied up. We're basically testing these highs. Doji candlestick, we overbought. So these areas below are now your support. Here's another trick I look at, guys. You see this 60 stochastic? As you know, the 50% area tends to be your dividing line between uptrends and downtrends. But also, don't be afraid to draw trend lines on these stochastics. So here, whenever I see these lows and highs, something like this, draw a trend line. So this, breaking this trend line, confirm right here on this candle, confirm that. You also could have done the same on the 10 stochastic. Next. Chart 18, here's the 2-hour chart. I was showing this a couple weeks ago, this possible inverse head and shoulder pattern. And at the time I said, you could go long, put a stop right here at this higher low. And this has obviously played out nicely. Now, short term, we are at this resistance up here. We have a MACD divergence setting up, RSI divergence. Also, look how wide your ribbon is here. Again, the ribbons, guys, they ebb and flow. They go through periods of contraction, expansion. So when they're expanded here, you're uptrending, you're trending, but they get too wide sometimes, like this. You do for a reversion to mean. They get pinched. That's a low risk short. So right here, to me, they're a bit wide. At minimum, they need to consolidate, come in. So we're probably due for some consolidation here soon with the divergence setting up in the indicators. Next. Chart 19, here's the 60-minute chart. So I talked about this late last week. Again, you can see your MACD divergence. So just from a technical perspective, it's been difficult to count 5 waves up, but now we can. We got this little hump here, wave 1, 2. The question here is this a wave 3 or is this a wave 3? So is this a wave 3? That was a wave 4 or a 5 here, and then we're starting a wave 4. Hard to say, but we'll see how this plays out this week. Next. Chart 20, another 60-minute chart. Shows you the moving average ribbons a little more with the wave counts. Next. Chart 21, here's another 60-minute chart. Very clean, simple chart. This is the ATR indicator, 14.3 setting. So 3 standard deviation, 4 length, or 3 length, or 3 standard deviation, 14 length. And you can see that's been following price up very well. On Friday, we pulled back here, tested that, and held it. But this is a nice moving average or ATR length to monitor if you have that indicator. Next. Chart 22. Here's a 15-minute chart of the S&P. Tons of gaps. The one thing that does concern me a little bit on the S&P are all these open gaps now. Look at these suckers. We have 4 open gaps. On the indexes anyway, gaps are magnets. They are filled over time. Okay. Now, on a bullish, if market's going to go up quite a bit higher before a correction, these gaps don't have to be filled right now, but in the short term, could we fill this one perhaps? This one? Definitely. So these are something to be aware of, that we have all these open gaps. This 15-minute time frame here, you can see your moving average ribbon. That's a nice guide. Starting to get pinched here. Hasn't flipped to a bearish configuration yet. One thing I'm wondering here, again, do we have a little ABC action going on here where this is an A, maybe a B, and then we come down again in a C and at least fill this gap, maybe this gap? Something to monitor. Next. Chart 23. Here's the daily KISS chart for the S&P. So no new DVTs here on the daily despite the rally up last week. So these DVTs are quite wide at the moment. The KISS systems went long. They were stopped out back here in September on this bar, and they of course went back long just slightly earlier than when they were exited right here on this bar. Next, looking at the intraday time frames or cycles. So here's the various cycles. The daily up here, we've had a nice rally up. Notice we got a sell cycle here. You see the little dot, and we have an A here that showed up on Thursday. You can see sometimes these A's occur a little early, but usually you get some sort of pullback within a few days. Those are amateur buying, we call them. And we got a little sell cycle. So now we'll see if we get a little consolidation. On the half day, that's the 195 minute, we had some A and a DeMark 9, and we have a DeMark 13. Also, your ribbon here, your BPT may quite stretched from the ribbons. Of course, your ATR on all these time frames is now support. Here's your 120 minute and your 60 minute. So it's support on these time frames. Next. Moving to the Dow, chart 25, weekly view of the Dow. Rallied off that support. Here I added a parallel channel. So on another push, watch to see if this becomes a resistance or not. Next. Chart 26. Here's the daily view of the Dow. Again, made new all-time highs last week. We are quite stretched in the short term with the RSI. Next. Chart 27. Nasdaq 100, they have yet to make new highs. They're lagging. Again, all those Fang stocks are reporting this week, so that'll likely be the decision factor to either strongly push the market back to new highs or pull back. But they're lagging. So weekly here, again, we held this weekly uptrend line. And longer term, 60 stochastic still firmly above that 80. RSI still firmly above that 50%. Next. Chart 28, here's the weekly KISS chart. So no new DVT here either. Again, the DVTs have been a series of progressions since the April 2020. None of those have been hit. You can see on the weekly time frame, 60 stochastic still firmly above 80%. Whenever it remains above 80%, you're in a, basically a strong uptrend. Next. Chart 29, here's the daily. Again, nice rally off those lows. You had basically a perfect ABC zigzag correction here. It didn't get down into the thin zone here. If it did, our target was, 200-day moving average. We've rallied up here. So now on a pullback, these moving averages are support. Next. Chart 30, here's the Nasdaq Composite. It had a perfect technical chart here. You basically, resistance areas here became support, which it tested. Didn't show up as well in the Qs as it did as the NASDAQ. Next. Chart 31, here's the NASDAQ 100 triple Q 60-minute chart. We had this channel. We gapped out of that channel. It was a breakaway gap. Rallied up. Now, we set up some very obvious MACD RSI divergence last week. So pulling back. So And we'll see if that continues this week. Again, a lot of Fang stocks are reporting. Next, chapter 32, another 60-minute chart, but this one has the ribbon. Next, chapter 33, here's a 15-minute chart. Note there's an open gap here. Well, it was actually filled on Friday. The S&P gap was not. Now the question here is this a little bear flag bounce and we come down again. Again, those Fang stocks reported this week will determine. Next, chapter 34, here's the daily KISS. No new DVTs here either. The DVTs were hit back here, the original daily, and it went back long here on the same day the S&P did. Next, chapter 35, here's the various cycle time frames. So here's the daily. So just like on the S&P, you have some A's, but you've had 3 A's in a row here now. And then finally a pullback on Friday. Remember, these amateur binds tend to be a little bit early, like back here. But they usually eventually give you a pullback. We have a sell cycle just like on the S&P. We'll see if that produces a consolidation or not. Here we had a DeMark 13 late last week, a little pullback. And again, your ATR on most of the time frames are your support, except for the 60, which we've lost already. Again, guys, these resistance cycle, price either stalls there or doesn't. You can see back here on the 60 where price went through this resistance. It's just like, think of these resistance cycles just like trend lines you would draw. It's a resistance cycle. You either stop at it or you break through resistance. When you break through the resistance cycle, that's bullish. Like back here, when you broke through this resistance cycle, you could have bought that. So don't think of that indicator as, oh, it failed there. No, you broke through resistance. Okay. Just like here, you broke through resistance. Okay. And those have become support. Next. Chapter 36, IWM, Russell 2000, still stuck in this big 8-month range, moving average. Ribbons pinched finally. It was wide back here. Doesn't look like it now, but back there in March, it looked super wide. It needed this consolidation. Still stuck in the pattern. One thing that's sort of bullish here, I'll say, is look at the MACD. This time has allowed the MACD to recycle all the way down here, and it's now starting to curl up. So we'll see now if it can cross to the upside. Next. Chapter 37, here's the daily. Again, we're stuck in this big horizontal rectangle pattern. We got resistance right here in the short term. So there you go, guys. That's the major indexes. Now let's move on and look at some indicators. Chapter 38, here's the VIX. So the VIX has been selling off as the market's been going up. Not surprising. Again, short term, though, as I talked about, RSI here got quite oversold. It doesn't do so that easily on the VIX, so VIX maybe wanting to try to bounce, and you can see the VIX was actually up slightly on Friday. I've been talking about this, that the lower Bollinger Bands of the VIX are pointing straight down. There's really no way for price to tag the lower Bollinger Bands. So I mentioned, and I hope this makes sense to you guys, that you really need a bounce in the VIX to allow those lower Bollinger Bands to kind of curl up. That would allow the VIX to eventually retest them. Okay. Next. Chapter 39, here's the VXX. That's one of the VIX ETFs on a 15-minute time frame. Little bullish pattern here. Looks like a bull pennant setting up, bull flag. So if you want to hedge short for the market, this would be something you could trade. Buy the trend line break out of here, the stop here. But again, if you get a big gap on Monday, say to the downside, it wouldn't be ideal because they could gap way out of this pattern. But for now, it looks bullish, and this is only a 15-minute chart, though. Next. Chapter 40, here's the 60-minute view of the VIX. You can see this wedge-type pattern developing. Next. Chapter 41, here's the S&P versus the HYG. That's the high-yield corporate. So one of my concerns a little bit with the market is the high-yield corporate is clearly lagging. S&P's made new highs. High-yield corporate is not. And these two have always moved lockstep in the past. When they haven't moved lockstep, that could go on a little bit, but usually then the market would have some sort of correction. There would be some sort of reset. It was a divergence that wasn't allowed to keep going, basically. So this is a negative for the market. The only other different thing could be here is that the Fed has hinted that they're going to eventually start tapering, and let's just face it, could be folks, investors unloading high yield corporate bonds over time because they know that easy trade is going to end. But there is this divergence to be aware of. Next. Chart 42, here's the NIMO. So a bullish thing in the market we talked about is that this spiked out of its upper Bollinger Bands after this decent low. And usually when that happens, you have some sort of decent low in place. Next. Chart 43, here's the NYSE advanced decline issues, breadth indicator. And so this has made a new high, so is the S&P. So for now, this is healthy. Remember, we had a divergence back there in late summer, which played out. But for now, this is healthy. Next. Chart 44, here's the NASI index plotted as a histogram. So far with the rally, this still hasn't went back positive. We'll be keeping our eye on this. You can see we had a reverse divergence here, back here, and prices pushed up, but it still hasn't went back above zero yet. This went negative first back in July, which was kind of a early warning signal. It was very early. Basically what it was saying was that it was showing you that just a few large cap stocks were participating in the market at that time. There we had a bunch of negative breath. The market ran up for another month and a half on strong negative breath is what happened there before the correction there in September. Next. Chart 45, here's the NASI summation plotted as a cumulative. Now this is still negative, so these this is a weekly chart, and these moving averages here. And so far, this continues lower. It's still not even trying to curl back up despite the Nasdaq itself rallying back. So that's something to monitor over time, that it's still not supporting the rally. Again, this does lag, realize guys, this lags, but so far it hasn't tried to curl here or anything. Next. Chart 46, here's the NAHL plotted as a summation. Now this one looks better. It really didn't have much of a correction here, more going sideways. You could see it crossed back 2020. It's been strongly up. Next, moving to bonds, chart 47, J&K, as I stated, this is the one thing that does concern me, the underperformance of J&K. It looks bearish, but again, could the market maybe allow for this now because it does realize the Fed will eventually taper? I don't know, but this is a negative, at least for now. One of the negatives, that this is sorely underperforming the S&P. Next. Chart 48, TLT 20-year bonds. After this complex ABC correction, a little choppy. Next. Chart 49, 10-year treasury yield. It's made a nice move out of this ascending triangle pattern. Remember, divide this by 10 to get your interest rate, which is 1.655% now. Next. Chart 50, 10-year treasury yield on the weekly. So really nice move. Remember, we pointed out this moving average ribbon pinch back in July this year. That obviously has been playing out. MACD recycled. Longer term, this could be a target around this 2% area. Now let's move to market sectors, guys. So transports, they were the weak sector this year, but they held support in September. They bottomed nicely, and they've been recovering pretty nicely here. After all the moving average ribbons came into here, pinching, bunched up, price cleared that out, and that was bullish, and they continue higher. Next. Chart 52, banks. They've also been super strong. The rates are helping that. They benefit from higher long-term rates. Next. Chart 53, financials, same deal. Next. Moving to the tech area, chart 54, XLC communications. This contains a lot of these Fang stocks, and this thing still looks very vulnerable to me. Look at your volume patterns. Bounced off this area, stalled here at the 50-day moving average ribbon here. Let me zoom in a little bit. Pinched from a bearish configuration. So also your stochastics, your faster one anyway, got overbought already. Again, guys, this will be dictated this week with those Fang earnings, but if they were to disappoint, could this, technically it looks weak. So it could just easily come down to throughout another correction. This 200-day moving average could be a target. You can see your moving average. We've been pinching from a bearish configuration there. So we'll see what those fangs do this week. Next, Chapter 55, XOK. Technology, again, moves with Qs. Very similar pattern. It's been a bit stronger than the Qs, but that did not quite test those highs. Overbought here. You know, this is your support area on a pullback. Next, Chapter 56, semiconductors. They rallied off the 200-day moving average here, off the divergent low. You can see Rsi Divergence. Now, I extended this wedge trend line. In technical analysis, after you break a trend line, extend it out, guys, because many times it still is important. So you can see price rallied up to there and has so far been rejected at that. Next, Chapter 57, here's the Fang index. Now this was stronger. This did make a new high. Okay, had a perfect ABC pullback correction. Next, Chapter 58, energy. That inverse head and shoulder pattern played out beautifully. Again, I said last week, if you're long these, you could probably just trail the stop up at the 9 EMA on a closing basis. Okay, had a hell of a trades from this area. Next, Chapter 59, oil services, same deal. They've had a nice trade. They haven't been as strong, or they haven't taken out the highs back here like the XLE did. Next, Chapter 60, here's the BPDR, bullish percent index. Again, been mentioning how this was at 100%, so finally it's pulled back a little bit. Remember, this can only go from 0 to 100% theoretically. So your times to really buy go buy a basket of energy stocks for swings is when it's down in this range. You know, when it's up here, more of a trader's market. Next, Chapter 61, Biotech. This has been the weakest sector this year. You can see it peaked out in February. This has formed these kind of lower highs since. Right now it's got a coil. Going to be interesting to see which way this breaks. Now, could it break up here or is it going to break down? If you go long here, just put a tight stop right here. So this is an either or. I'll be watching it this week. I think it on a 60-minute time frame, it looks more bullish to me. So I may go long with a stop there. Next, Chapter 62 is the weekly chart. So if it doesn't hold here, if it were to break this down eventually, you know, it could go down to this range, correct all the way down to 100. Now I think it would be a fantastic, unbelievable buy down here. All right, I just don't know if it's going to get down to here. So we'll see what it does in this pattern. You can see we're coiling, you know, most of the year. Next. Chapter 63, industrials. They rallied off the 200-day moving average at this big support area. They're approaching resistance. Sector looks decent. Next. Chapter 64, there's the weekly view. So weekly view, you have this potential bullish pattern trying to break out of this big channel. Next. Chapter 65, XLP. Bounced off the 200-day or near it back there. Hasn't taken out the highs. Looks okay. Stalling a little bit right here, but it looks all right. Next, Chapter 66, XLU utilities. They bounced off the 200-day moving average. They were down 14 days in a row here, so you had a nice technical bounce trade. And then if you've been patient with it, though, it's recovered about 50% of that decline for a trade. Next, Chapter 67, healthcare. Had a perfect double top back here in early September. Pulled down. They didn't quite tag the 200-day moving average if you were waiting for there. But you got basically a double bottom here. Again, this support, you can see how found support at previous resistance. So that was an area you definitely look for a long. Now it's rallied up just around the 50-day moving average. Next, Chapter 68, consumer discretionary. They broke out of this channel couple weeks ago. A little overbought right now. Next, Chapter 69, real estate. They've recovered pretty nicely here as well. Next, Chapter 70, ADR. That's international. They held this major support. Remember, if they didn't hold here, you had a big thin zone that would allow it to correct down to here, but we held. We broke over this parabola resistance line as well. Next, Chart 70, emerging markets. They closed up slightly for the week. They're still in this big channel. Again, to me, if you're long this, just put a stop here on a longer term basis. This area should hold. You can see it was big support, and it's been defending that. Next, let's move to commodities. DBC, the index ETF. Again, was downtrending since 2008. I became bullish on commodities late last year. And you can see this has had a nice year. Really nice move all up this year. You just had a little consolidation for a month or two there. Moving again. This is your next potential target up here around 24. You can see how your long-term moving average ribbon flipped early in the year. So that's why I've been bullish on commodities, guys. Next. Chart 73, here's the weekly view. Look at this just 5-wave uptrend. It definitely is, you can count clearly 5 waves up. So it's a trending impulse move. Next. Chart 74, looks like I got a duplicate weekly, so let's move on. Chart 75, here's the daily. So recently it broke out of this resistance range here in September. Little overbought here in the short term with the RSI, but it's still holding that 9 EMA. Again, long term, it is uptrending. Next. Chart 76, let's look at some ratio charts. So here's the CRB to the S&P. Weekly chart, going back to 2010. Commodities, you know, have been underperforming the market for years. But look at my moving average ribbon here. And you can see, you know, it would pinch, but never really cross. And it finally has started to cross this year. It's hard to see here, so let's look at a zoomed in time frame. But you can see my point is that this uptrend cycle could just be in its very early stages. Next. Chart 77, here's the same weekly chart zoomed in a little bit. You can see here how the moving average ribbon did clearly flip here. You can see the first pinch was bought and this pinch was bought. So clearly it did break. Now we'll see if it can hold that. Next. Let's look at some of the individual commodities. Here's crude oil. Took out that resistance a few weeks back, which I told you it would, the 77 area. It's onward and upward. Next. Chart 79. Here's the monthly view of crude oil. It peaked back here in 2008. Those of you remember, it got to about 150 bucks back then. And we took out this long multi-year downtrend line back here in early 2021. We took out this resistance here. And again, you can see there's really no resistance now till you get about to the 95 area. By then, you might as well tag 100, right? Next. Chart 80, here's the daily view of crude oil. Just continues to onwards and upwards. Just continues to hold the 9 EMA on a closing basis, with this area now being strong support on a good pullback. Next. Chart 81, natural gas. Hell of a year. Hell of a rally, especially since the May-June timeframe. Overbought here, but you can see the pullback held this previous resistance. The resistance going back to 2018 became support. Next, chart 82, there's the daily. Bounced off the 50-day moving average as I suggested. That was being a good buy opportunity. So far, the bullish view here is you had a simple ABC correction. Next, chart 83, copper. Nice rally out of this coil pattern. It's pulling back here. Again, what I want to see it obviously, you know, not pull back into this pattern, but my thoughts here, it'll probably form a higher low and rally up again. Next, chart 84, DBA, agriculture, have been strong uptrends since 2020. This area down here is now big support if it were to have a good correction. That's your next long-term resistance. Next, chart 85, here's the daily. Daily's been pretty choppy here lately. Your low-risk trades were back here at the support, this wedge. I don't trade DBA much, guys. It's a slower mover. You can see what the components are here. Next, chart 86, uranium. This has been my puppy all year. I talked about this late last year, this multi-year trend line that was broken late last year. That's where I became bullish on uranium from a long-term perspective. You broke a multi-year trend line, stage 1, Weinstein breakout. super move up. All these pullbacks are buying opportunities. You had a larger pullback here. And even recently, you made a new high. Pretty stretched here, though, lately. Next. Chart 87, here's the monthly view. We came out of that multi-year base. For the month, up 19%. It's been a hell of a year. It's up 100% at least this year. Next. Chart 88, here's the daily view. Next. Chart 99, cotton. Just following up on this. Cotton was one I was not following. Also broke out of a multi-year base a couple months ago. Now, on a pullback consolidation, ideally this would hold as support, and then you get another big rally off of it. Next. Chart 90, here's the weekly view of cotton. You had a beautiful technical ascending triangle here, which met its target. That's why I've not been aggressive trying to buy this. You know, it already met this move. To me, it needs a longer consolidation, perhaps. Next. Chart 91, cotton on the daily chart. So, recently, cotton broke out of this trend line resistance in September. Hell of a move up there, which I missed, unfortunately. But what I'm watching for now, potentially, is an ABC correction. You've had an A, and I see this more of as a B move. Maybe we get a C move down here to the 50-day or something like that. Or maybe a more complex correction. But if we get a C move down, I may buy some cotton. How do you buy cotton? Well, there's an ETF, Bale. Let's look at that. Chart 92, Bale, the ETF. So same pattern, basically. You can see this is big, big support. If it got down in here, I would for sure buy some. Next, moving to Kryptos. Here's Bitcoin. That made a new all-time high last week. It's been pulling back since. Now we'll see what it does this week. But, you know, a lot of people took profits up here, which was a great area to do so. Next, chart 94, Ethereum. It's also had a nice move up. Did not make just barely made new all-time highs here or that close to it. Has not been as strong as Bitcoin. Next, chart 95, US dollar ETF. So notice one thing here, moving average ribbons are pinching again. Last time they pinched, price rallied. It broke out of this potential ascending triangle pattern, but came back below it. So for this pattern to still be viable, you want to see the dollar hold this uptrend line. Next, moving to precious metals. Here's gold on the weekly, up 1.5%, 1.6% for the week. Again, it based back here for years. Started a nice uptrend in 2019 into 20, topped. This is your big support. This is your big resistance. Next. Chart 97, here's the another weekly chart with the ratio. The stocks have been outperforming lately, but again, long-term resistance, long-term support. Next, chart 99, here's the monthly view. So the monthly view, again, we had this large multi-year rounded bowl pattern back here. That was the time to buy a bunch of gold, quite honestly. Big move up. The bullish view here is you have an potential ABC correction and eventually break out. I know everyone thinks gold is dead. Crypto is the only thing. All the gold bugs have converted to crypto nuts, but maybe, just maybe, gold could do this. I lean to this, but we'll see if I'm right or not. Next. Chart 99, gold in the daily. This is your main resistance. You can see it got above there a little bit on Friday, pulled back. So we'll see if it can finally get up through there this week. Again, the stocks have outperformed lately. GDX GLD ratio. They lead, so that's what you want to see. Next, chart 100 silver. Nice move out of that wedge pattern. Next, chart 101 platinum. Also a nice move out of this bottoming pattern. Took out the 50-day moving average and trend line here. Moving average ribbon flipped to a bullish configuration. We'll see if it can hold that. Next, chart 102 platinum ETF. Moving on. Chart 103 GDX weekly view up about 1.5% for the week. Nice rally the last few weeks on GDX. They got quite oversold. Next, chart 104. Here's the daily. I've been hoping for this inverse head and shoulder pattern, but for this to play out, guys, we need to see GDX pretty much pull back right away, kind of like this. If it goes up much higher here, you would not have a head and shoulder pattern because your neckline would be like that. It's not valid. So for to have a valid neckline, we need to see GDX pull back soon, which I kind of hope it does, because pull back higher low would be a fantastic buying opportunity. We do have some RSI divergence up here, so we'll see, and we're near the 200-day moving average. There's been a hell of a rally from here. Okay, so we'll see if we can get that pullback higher low on this ultimately, which would provide a buying opportunity. Next, Chapter 105 SILG Silver Junior ETF. That's another way to play the stocks. This GDX and GDXJ. Black candle, inverted head and shoulder, inverted candle on Friday. On a pullback, ideally this would now act as support, this broken trend line. Next, looking at a few individual names. HMY was the one I pushed pretty heavily back in September. You got a perfect falling wedge, MACD divergence. It's played out beautifully near its 200-day moving average. I sold most of my position. I'm now hoping for a pullback, but I got a nice trade out of it. Next, Trevor 107, BTG, hell of a move out of this channel. So I was hoping it'd pull back in here. It never did. So I don't have a full position, but it's had a hell of a move. I have sold most of mine. I'm now looking to buy on a pullback. Hell of a move out of that channel. Next, Trevor 108, Newmont. I still own a little bit of this one. Broke out of this wedge. That's where I bought it, was the wedge. This was a long idea of ours we put out back then. This has still the potential to form a right shoulder if it gets a pullback soon. You know, right shoulder. So that one still has potential for that. Finally, Trevor 109, IAG. This was also one I was talking about heavily back in September. This basing pattern, the volume patterns look good and had a hell of a move up to its 200-day moving average. That was a great place to take profits on Friday. Look at that inverted hammer. Maybe we get a pullback finally. I sold most of my position in this too. All right, guys, finally following up with trade ideas. I'm not going to show anything new here, just going to cover some triggered setups. So AMD, I showed this a couple weeks ago, is a falling wedge, A, B, C, D, E, and it's moved up nicely. Check to see when these have earnings. I did not check that, but make sure to check. You can see it's had a nice move up, basically back to these highs. Next, Trevor 111, BABA was a long idea, Chinese internet. Our long idea was back here in the wedge, and then we had another long idea in this little tight flag, which played out. Next, Trevor 112, KWeb, Chinese internet. It's going to move similar with BABA. You did break symmetry here recently. This was about a 12-point move off the lows. So previous largest rally was 9.5. So you did break symmetry. We'll see if we can form another higher low. Next, Trevor 113, lows. This pattern is played out outstanding. Look at this. Beautiful move out of this cup and handle type pattern. Very extended now, though. RSI 5 at almost 96%. It's been up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. Next, Trevor 114, Devon, one of the energy plays, a long idea back in September of ours, has done well. You could trail a pretty tight stop up on this one. Next, Trevor 115, CVX, another one that was a long idea back here in September with this trendline break. Hell of a move. Next, Trevor 116, ExxonMobil, same deal. Stalling a little bit at resistance, which is what you'd expect. Next, Trevor 117, Disney. So Disney still looks like a short to me, potentially. I think they report at the end of the month, or maybe it's November. I got to look. But this is your support where it's got to be lost. So if it loses this support, you have a potential target down to this gap. All right, guys, that does it. Let's see. Futures will be opening here in about 6 minutes. So we'll see where they open. And that's it. Enjoy the rest of your Sunday evening. Take care, and I'll see you this week.